Have you ever opened up your payslip, taken a look and just thought, where on earth did all my money go? Trust me, you are not alone. The UK tax system can feel like a complete minefield. And what's crazy is how easy it is to overpay without ever knowing it. So today, we're going to figure out if that's happening to you. You know that feeling, right? You've put in the hours all month long. Your banking app finally pings, you swipe open to check your balance, and it's just not what you were hoping for. That gap between what you earn and what you actually get to keep, well, that's mostly tax. And the stress of not knowing if you're even paying the right amount, that's a huge weight on so many of us.
Well, that confusion stops right now. We've actually teamed up with the brilliant people over at My Tax Accountant for this. Honestly, these are the pros who live and breathe this stuff day in, day out. They've helped us put together a really clear, straightforward guide to finally demystify your tax bill, spot those common traps, and figure out exactly where you stand. Okay, let's get into it.
All right, first things first, we need to tackle the single biggest mistake people make when thinking about their tax. It's a really simple idea, but it's the foundation for everything else, and it's where things so often start to go wrong. It's not about your main job, it's about the whole picture.
This right here is the absolute key. HMRC doesn't care that you have your salary in one box and that little freelance gig in another. Nope. They throw it all into one big pot called your total taxable income. That includes your main salary, any side hustle money, any rent you get from a property, dividends, even some of the interest from your savings. Every little stream of cash gets added together, and that final number is what they base your tax on.
And here's the trap. In our minds, that side hustle cash is just a bit of a bonus, right? It's separate. But to the tax man, it's all one and the same. You might think that extra couple of grand you made from a project is no big deal, but listen, if your main salary is already sitting close to a tax threshold, that little extra could be the very thing that tips you over the edge. And all of a sudden, you're paying a much higher rate of tax on that part of your income.
Okay, next up, we're going to decode something that most of us see on our pay slips, but very few of us actually understand: your tax code. That little combination of numbers and letters is a direct order from HMRC to your boss on how much tax to take from you. And if it's wrong, it can cost you a fortune.
So what is a tax code, really? The easiest way to think about it is like a little instruction manual. HMRC sends it to your employer, and it says, okay, this person can earn this much tax-free this year, and you need to tax the rest at this rate. Simple as that. But here's the crucial bit. These codes are wrong all the time. And that could mean you're overpaying by hundreds, maybe even thousands of pounds every single year without having a clue.
So let's quickly break these down. Most people with just one job should be on 1257L. That 1257 part just means you get your full £12,570 tax-free allowance. Easy. Now, if you see BR, that means basic rate, and it's often used for a second job. It taxes everything at 20% from the get-go. A K code is a bit different. It usually means you've got some other untaxed income, like a company benefit, that's worth more than your allowance. And if you see W1/M1, that's an emergency code. And believe me, that almost always means you're paying way too much tax until you get it sorted out.
So why on earth would your code be wrong in the first place? Well, HMRC's system can sometimes be a bit slow to catch up with your life. Say you've just changed jobs. Your new employer might not have the right info from your old one, so they'll stick you on an emergency code just to be safe. Or maybe you've just started getting a company car or private healthcare. That's a taxable benefit that changes your code. Or maybe you've simply picked up a second job. The system can get confused and not apply your allowances correctly. Any of these should be a massive red flag to go and check your code.
Okay, so that's the theory. But let's see how all this actually plays out in the real world. We're going to put some faces to these numbers, because I think this is where it's all going to start making sense.
So, let's introduce Jane. She's a full-time marketing manager based in Leeds, earning a solid £55,000 a year. On the face of it, her tax situation looks pretty simple. She's a higher rate taxpayer, but only just. So you'd think things would be straightforward, right?
Well, like so many of us, Jane has a side hustle. In the evenings, she does a bit of freelance design work, which brings in an extra £4,000 a year. Now, remember what we said back in Section 1? You have to add it all up. Her total taxable income isn't £55,000, it's £59,000. And that is the number HMRC cares about, pushing her much more deeply into that 40% tax bracket.
But wait, here's a little ray of sunshine for Jane, and for anyone else with a side business. She doesn't necessarily get taxed on the full £4,000. She can actually reduce that number by claiming for legitimate business expenses. We're talking about things like the subscription for her design software, a percentage of her home internet and electricity bills, even the cost of a new laptop. Claiming these expenses lowers her taxable profit, and that lowers her final tax bill. It's such a simple step, but so many people forget to do it.
All right, now we're going to get into some of the really sneaky parts of the UK tax system. These are the hidden traps that can catch even the smartest people out and lead to some seriously nasty, unexpected tax bills. Okay, so let's bring in our next example, Bob. Bob's a software developer in Manchester, and thanks to a recent promotion, his income has just crept over the £100,000 mark. Now, he's expecting to pay the 40% higher rate tax, sure, but what he has no idea about is that he's about to walk straight into one of the most brutal tax traps there is.
This chart shows it perfectly. It's one of the most painful parts of the whole system. For most of us, the first £12,570 we earn is completely tax-free. But the second your income goes over £100,000, HMRC starts taking that allowance away from you. The rule is, for every £2 you earn over 100 grand, you lose £1 of your tax-free allowance. And as you can see, by the time your income hits £125,140, poof, your entire tax-free allowance has vanished.
So what does this actually mean for your tax rate? Well, it creates a mind-boggling effective tax rate of 60% on your earnings in that specific slice of income between £100,000 and £125,140. I'm going to say that again, 60%. It's because you're paying the 40% tax rate on that income, and you're also losing the tax break you would have had on your personal allowance. It is absolutely brutal.
And the fun doesn't stop there. If you've got kids and one of you earns over £50,000, you start losing your child benefit through a separate tax charge. Get a big bonus at work, it can get hammered by emergency tax in that 1 month. And the big one that's affecting millions right now is fiscal drag. Tax bands haven't been rising with inflation, so even a small pay rise that's just meant to cover your bills can be enough to push you into a higher tax bracket, leaving you worse off. Okay, we have covered a lot, and I know some of it can sound pretty scary. But look, knowledge is power. Just being aware of these things is the first step to fixing them. So let's wrap this up with a really simple, actionable checklist you can use right now to give yourself a quick tax health check.
Here's your 5-step plan. Number 1, log into your HMRC account online and actually look at your tax code. Does it make sense? 2, be honest. Grab a piece of paper and list every single source of income. 3, check that total against those tricky £50,000 and £100,000 thresholds. Are you getting close? 4, don't leave money on the table. Think about any tax reliefs you might be missing out on. And finally, number 5, armed with all this new info, take a proper look at your next payslip. It should start to make a whole lot more sense.
This is just a great piece of advice. The point of all this isn't to make you panic. Sometimes a high tax bill is actually correct, especially if your income has gone up, but you really do owe it to yourself to be 100% sure. Taking just an hour to run through these checks could literally save you a lot of money. And maybe, just as important, it'll give you real peace of mind.
So after hearing all that, are you ready to stop guessing? Are you ready to finally know exactly where you stand with your taxes and feel back in control of your own money? Look, while this guide is a fantastic place to start, for a lot of people, especially if you've got multiple jobs, a side hustle, or you're anywhere near those tricky thresholds we talked about, the absolute fastest and best way to get clarity is to talk to an expert. They can look at your specific situation and spot savings that you would probably never find on your own.
And that is exactly where My Tax Accountant comes in. If you want proper, personalized advice and a full review to make sure you're not overpaying by a single penny, you need to get in touch with them. You can call them or even just send a WhatsApp to the team on 07-854-255-375. Or you can send an email over to info@mytaxaccountant.co.uk. And for more brilliant, clear advice just like this, make sure you go and subscribe to their YouTube channel. Thanks so much for watching.